Okay, chapter 1.8, calculating net income. So net income is really the amount of money that gets deposited into your bank or that you get to spend. When we talk about calculating gross income in the last few chapters, that's the amount that you do get paid. But most times, especially once you hit 18, once you get a full-time job, there's sort of more and more deductions that get taken off of that gross pay and leaves you what is called the net pay or net income. So think about like a fish net. If you have goldfish, you put in a net to pull out the goldfish. That's what you keep, and then you change the water, right? So in income, the net keeps what you get to spend, and the other stuff goes to basically to the government or to your employer or different things. So really it involves two types of calculations. The main one is subtraction, so that's not too big of a deal. And then if you do have to calculate the percent of your gross income that goes to each deduction, then you're dealing with percents. Okay, so to try these are all adding and subtracting questions. So you can use your calculator for these. $340 minus $36.85 is $303.15, and 426.44. So this first value would be like what your gross income is, maybe for a week or something like that. And then what you're subtracting are your deductions. Okay, so that leaves you with $376.57. Notice here these are in brackets, so this would be like saying these are your three deductions. Add those together first, so 37.88. So think of order of operations. You have to do the brackets first. Okay, and that's $56. $56.33. And so you want to take your gross pay and subtract that. And again, you can go up and copy it if you have a calculator like mine or any kind of graphing calculator. In a newer version, I guess I should say. But an older version of this calculator, you can use that second negative, which is answer. It takes the previous answer. Okay, so that's the try these. So let's look at some actual questions. So Mark works for a landscaping company. Last week his gross income was $287. His deductions totaled $45.36. What is Mark's net income? So you just want to subtract. It's pretty straightforward. Okay, but you want to know the difference between gross income and net income. Really, it's a bit of a hint if you're given what the deductions are. If you don't know what they are, you can't calculate net income. So yeah, so that's his net income. Okay, and here on the left it says what is net income? It's the money left after deductions are taken from gross income, also called take-home pay. It's what you can take home. Okay, so here are the standard deductions, government deductions, so income tax. So every employee has to pay income tax. Depending on how big your salary is, your gross income is, you have to pay different amounts based on that. Okay, so there's kind of a step scale of how much to pay, but your employer figures that out, and then when you file your income taxes at the end of the year, you basically, if there's a discrepancy, then you might get a little bit of money back or you might have to pay. Usually your employer knows the exact amount. It would only be different if you had 2 jobs. Okay. Employment insurance, a fund that provides a source of income to people who lose their jobs through no fault of their own while they look for a new job. So it used to be called unemployment insurance, and now it's employment insurance because you're really insuring your employment. So EI, and then that I think you have to work. It may not be taken off for part-time employees because you may not get EI if you work maybe under 20 hours a week. So that may or may not be taken off. Canada Pension Plan, that provides a monthly pension to workers when they retire. So once you have to be 18 in order to contribute to that, and then the government keeps track of how much you've contributed, and when you retire or when you want to start collecting at age 65, you can collect a little earlier, but there's a penalty. But 65, you start getting a little bit of pension for that. Okay, it's not really enough to live on, so you want to save money throughout your working life as well. Okay, but it is something that will help pay the bills. So example 1, Shannon is manager of a sporting goods store earning $770 per week. Calculate her standard deductions. So here's where we have to actually calculate the deductions. So income tax is 15%. Each year these change slightly. Okay, so just be aware of that. These aren't exactly what's calculated right now, but we'll use these in our calculations. So remember, 15% is 0.15 of means multiply. So 0.15 times 770 is $115.50. Then 1.73%, remember, you have to divide that by 100. So that's going to be 0.0173 times 770. And then round to the nearest cent. And then 4.95% would be 0.0495 times 770 is 38.12 in this case. That 5 makes the 1 go up to a 2. So those are her standard deductions. Here are some other optional deductions. So your company might have a pension plan. For teachers, if you're a teacher in a public school, at least in Alberta, you contribute to the Alberta pension plan. I think it's called Alberta Retirement Fund. No, Alberta Teachers Retirement Fund. In any case, so your employer may or may not have that. Company health plan. So sometimes you might have to contribute to that. Sometimes it's offered. In Canada, we can get health care without paying. Really, it comes through our income tax. But this is for sort of the extras. So if you, so for dental or eyeglasses or prescriptions and that kind of thing. Life insurance, again, that's often, that's not at every company, and it may or may not come off your paycheck. It may be automatic that you get it. Disability insurance, again, that's if you get disabled through work, then you would get some insurance from that. Union dues, so that is something like teachers pay, we call it association dues, but essentially it's a little bit every month because we belong to a union or an association. Payroll savings, that's obviously optional. Some companies will allow you to contribute and save money. Basically, maybe get a higher interest rate than at a bank. Charitable donations, you can donate through your company. It comes off your paycheck, but it's really, that's totally optional as well. So last one here, Todd earns a weekly salary of $635 as a computer technician. The deductions from his gross income are shown at the right. So they've all been calculated for you. What is his net income for the week? So if you know all of these, then just add them up to get the total deductions. So $8.70, $31.43, $95.25, $19.55 and $15.75, and then add those up. So $8.70 plus $31.43 plus $95.25 plus $19.55 plus $15.75. With my graphing calculator, I always want to scan because sometimes it doesn't register. Okay, so 170.68, and then we're going to subtract that from his pay. Okay, and again, I can go second answer, or I can copy it, $464.32. So that's what he can spend. Okay. Doesn't even see the other deductions. Wanted to go through one question from the practice, number 6. It says Jen is a dentist and earns an annual salary of $135,500. Each month she pays $2,925 in income tax. What income tax rate is Jen paying? So here, this is annual, right? And this is monthly. So they're not in the same time period, so we need to make that the same. So you can either divide her annual by 12 or multiply her income tax by 12. I'm going to do it in annual. So I'm going to take the income tax, that's the dollars per month, and multiply by 12 months. Okay, so go 2,925 times 12, and that's 35,100. Okay, so that's income tax. So now the income tax percentage is, so we know how much she's paying in the entire year, and that needs to be compared to her gross income, okay, or gross annual salary. So we divide and then multiply by 100%, symbol. Okay, so in our calculator, I have that amount. I'm going to just press divide, 135,500, and then times by 100. And that is 25 let's go to one decimal place, 25.9%. As I mentioned before, the more you get paid, there is a higher rate. Now, saying that, it's not just a flat rate, like it would be a certain rate up to, say, $80,000 in a year, another rate from 80 to 120, and that kind of thing. Okay, but that's it. So that's the end of 1.8.